Hello and welcome everybody. I'm Stephen and I'm a popular investor on the eToro platform. Just as a quick reminder, as usual, don't forget to like this video and subscribe to my channel. That will be really great as I just try and get the word out to as many people as possible. So today, no 𝗱𝗶𝗀𝗀𝗀𝗀 t-shirt. I apologize for that. You're going to have to deal with me in a lilac jumper, and I will have to up my crypto t-shirt game for forthcoming videos. So you may not have heard from me for a couple of weeks and there hasn't been a video, and I just wanted to explain a little bit why. I've been studying for my exams, so many of you will know that eToro is required for elite popular investors and above to complete a Chartered Institute of Security and Wealth Management exams. I'm really proud to say that last week I managed to pass that exam, and I had been putting a lot of work into studying for those exams because it hasn't been easy. In addition to that as well, last week we also had the Evergrande situation, and it required my attention to do numerous kind of short-term trades to play the volatility. So that is another reason why I didn't make a video last week. But we are here today and I promise to be as consistent as possible on making these videos in the future. So last week I was very busy with the Evergrande situation, which required a lot of my time because I wanted to do a lot of short-term trades in order to play some of that short-term volatility that was in the markets. But the Evergrande situation actually caused the markets to pretty heavily dump on Monday, not only in Hong Kong and Chinese stock markets, but also in the US in terms of the NASDAQ and the S&P 500 and stocks within that as well. Because really what happened is it caused a big panic in the market. So Evergrande is one of the largest developers in China. And really what happened is that as they continue to grow and the Chinese real estate market became really hot, they became extremely over leveraged and debt ridden. And what actually happens after a period of time is that you are obligated to start paying back some of those debts and liabilities that you had. And Evergrande have not been able to do that. So that has caused a lot of kind of fears in the market. And there's a lot of media outlets, etc., that were saying that this could be a Lehman Brothers type situation like we had in 2008. However, I don't believe that is to be the case, and I think that it's going to be fairly well contained in China. And I'm pretty confident that the Chinese government are going to bail them out. And I wrote a very long post on this earlier on in the week, but just a short summary is really I think that they are too big to fail, and I think it's very important for the Chinese economy to be able to contain this. And mid last week and towards the end of the week, we saw a rally in stock market as the Evergrande fears started to subside a little bit over some of the debt restructuring and the liquidity pumped into the system in China. And also on Wednesday, there was a Fed meeting which was concluded, and the Jerome Powell, who is the head of the Fed, all eyes were on him to whether he would announce when tapering measures would start overall in the economy. And although he said that they were expecting tapering measures to happen sometime in the near future, they didn't actually set out a complete date. And they said that they were going to continue to monitor what was happening overall in the economy. So this was seen as a very bullish sign and provided further tailwinds for rises in the stock market towards the end of the week to recover from some of those early week losses. There's also a quarterly survey which is conducted by key policy makers within the Fed, in which they try to forecast where they think interest rates will go in the short-term future. And this was some really interesting results that were released, and what was actually said was that they expected the medium short-term interest rates to rise, which was a bit higher than was expecting. There was also some key data around the manufacturing and service sector activity. And what it actually showed was that there was a mild decrease in the amount of activity in August compared to June. However, on the contrary, there was some good housing data, which actually showed that new house builds and the activity there had actually increased and was actually at a 4-month high. As we move on to Europe now, the general markets were quite good last week, and we saw some modest increases in the indices in Europe overall. And there was a few key things that happened in Europe last week. So one of them was that Norway had actually announced that they were going to slightly increase the overall short-term interest rates. And this is really kind of key because it's one of the first countries within Europe and the European area in which it's going to start to increase the short-term interest rates. And they actually said that they would plan to possibly have a second rise in interest rates towards the end of 2021 as well. So this could be a starting point for other countries in Europe to start to consider increasing the interest rates. However, in the UK, they actually announced that they were going to keep the interest rates at 0.1% in terms of their interest rates, and that they didn't plan to increase those interest rates quite as of yet. Although it was noted that some Bank of England officials have actually stated that they would like to see the interest rates start to rise soon. So that could be something to keep an eye on. And we could see more policymakers in the Bank of England want to increase those interest rates. We also saw some key data from Europe around the PMI and the manufacturing and the service sector activity. And what we saw was that there was a decrease in the PMI from 59 reading in August to about 54 in September. So we are seeing a gradual decrease in manufacturing and service sector activity overall in the Eurozone. And a lot of that is to do with some of the supply chain bottlenecks that have appeared because of COVID-19. We also saw some data around the PMI for the UK as well, but it was a very small difference in terms of the manufacturing and service sector activity. It actually changed from 54.1% in August to 54. So it was a very small difference. So as we move over to China now, this week again was dominated by the Evergrande news. And what I thought I would do is in this section of the video, I would try to explain a little bit more about what happened overall with Evergrande. Just as some background to Evergrande, Evergrande is one of the largest developers overall in China, and it has over 200,000 employees throughout the country. The Chinese real estate market has been really hot over the last few years, and we've actually seen a big increase in the prices of properties throughout China. And as you can imagine, this has really encouraged a lot of the developers, speculators and builders to build as many properties as possible around the country and start to flip and make money on these properties overall. And of course, with this comes a lot of debt, because in the market there becomes a lot of speculation, and it becomes quite easy for these developers to be able to get loans from banks at quite low rates, and having to, quite importantly, just put a small amount of capital or collateral in the building projects. And this kind of developed over a period of time. And what actually can happen is that these companies become really indebted, and they build up a lot of different creditors in terms of small and medium enterprise companies that work with Evergrande, and also the general public who are want to build properties, for example. And what's actually happened in the Evergrande situation is that Evergrande have got more and more in debt. And then at some point there becomes a time where they have to start to pay back some of those loans and those liabilities that they had previously. And they simply do not have the money to be able to pay off those debts. Overall, Evergrande has a debt of about 2 trillion yuan, which is about 309 billion US dollars. Evergrande currently have over 800 projects which are currently under construction, and it has actually been said that over 50% of those projects have actually been halted because they don't have enough cash to continue to pay suppliers and to continue to pay employees to do construction. And this has caused a lot of normal everyday people in China who have building properties for themselves or for their families or as investments. The projects have been stopped, and there's a real risk that those projects may never start up again and those people could lose their money. And it's been pretty clear for a while that Evergrande have been having financial difficulties because it's actually been said that over the last year or so that Evergrande have actually been offering discounts for the construction of projects if people were to pay in cash, and they've actually been offering over 30 to 40% discounts if people paid in cash, which is a sure sign that they really required some liquidity and some cash flow to come into the company. One of the other key issues that they're having is when very large development companies they ask money from the bank to fund future projects in terms of construction and real estate. Quite often what they actually ask is for a down payment or some collateral that's actually put in by executives of that development company. Because it makes them feel like they're fully invested in the future and the success of those projects. What Evergrande actually did is they actually offered something called 𝗁cie𝗹𝗶𝗀𝗀, and what that basically means is that they asked their employees to actually put money into this product, and then what actually would happen is then they would get a high level of interest, and that this would be redeemed after 1 or 2 years. And now what's actually happened is those periods have actually expired, and they actually owe a lot of money to employees, also partners and other people that they issued this product to as well, and they're at a big risk of default. Evergrande have been doing their best in order to be able to pay back some of these large amount of debt that they have, and they're actually considering selling some of the large urban and commercial projects that they have around the country. They've also done some sales of some of the smaller subsidiary online platforms that they have in order to be able to generate as much cash as possible to be able to service some of these debts. My personal opinion is that they will get bailed out or supported by the Chinese government, and I think what's going to happen is going to be a slow restructuring of debt and support from the Chinese government. I think the Chinese government will see Evergrande as being quite a large systemic risk in terms of the overall infrastructure of China as a country, because this will have kind of domino effects on other developers, but also other small and medium-sized enterprises who might be suppliers or might be involved in the industry. Also, this has effect on the everyday people in China as well, because there's many people that are building apartments or projects in which if the projects are halted and they cannot continue, many people are going to lose a lot of money. And this isn't good for the overall Chinese mantra of social prosperity, in which they've been talking about a lot over the last couple of months. This isn't like Alibaba or other tech companies where they're trying to get a company to fall in line with the new policies and the regulations in order for them not to get too big or to get too powerful. This is to try and ensure that there is no systemic risk to the overall Chinese economy. And overall, I think that they're going to feel that Evergrande is too big to fail. And it's going to be very important that they help them along their way. Obviously, they have to be careful that they're not seen to just be bailing them out and encouraging companies to get more and more debt and take on more risks. But I don't think they really have much choice overall in this situation. And although I think that this could have some ripple effects overall in China in the short to medium term, I don't see this as a big issue like people have been saying in terms of this could be the next Lehman Brothers in terms of the bailout. One thing, I think it will be pretty well contained within China. Although there are some foreign bondholders, I think that the impact will be minimal overseas in terms of financial institutions in the West, for example. And I expect it to be fairly well contained overall in China. And although it seems like a big amount of money, I think it isn't extremely huge if we actually consider the overall size of the Chinese economy. And it's been pretty clear for a while that Evergrande have been having financial difficulties because it's actually been said that over the last year or so that Evergrande have actually been offering discounts for the construction of projects if people were to pay in cash, and they've actually been offering over 30 to 40% discounts if people paid in cash, which is a sure sign that they really required some liquidity and some cash flow to come into the company. As we look at the top 3 performing stocks of last week, our best performing stock of last week was a company called Nel Hydrogen, which actually increased by over 12%. And this is a stock that we have, which is listed on a Norwegian stock exchange that actually deals with hydrogen power. The second best performing stock of last week was Magnite, which is an advertising company on the sell supply side. And that actually had an increase of over 6.96%. The third best performing stock of last week was a company in our portfolio called Aéroports de Paris, which is basically an airport holding company for several major airports in France. And actually we are seeing an increased number of flights throughout Europe as a lot of the restrictions have been lifted on COVID, which has actually been very good for the stock. So that was up about 6.5% last week. As we move over to crypto now, many of you have been worried over the last few days after it was announced again that China would be doing further crackdowns in regard to cryptocurrency. So again, this isn't much of a surprise considering what happened in May when they essentially banned Bitcoin mining in the country. And also previously, over many years, there's also been reiterations of some types of restrictions around cryptocurrency. So this is not our first ban rodeo. It's happened many, many times, but I understand for some of you, this may be a new concept. It's also happened many times with India as well. So what is this latest news that's come out of China? Well, basically, the latest news is that there was an announcement by the People's Bank of China that they were going to have many different agencies in China combined to put further crackdowns in regard to crypto. So what has been added and what is new? Because obviously there is not any mining in China anymore, as most of those Chinese miners have migrated to other places. Also, there hasn't been many exchanges actually in China for a long time, because many of the crypto exchanges actually moved abroad, as there were previously a lot of issues around having cryptocurrency exchanges in China and a lot of regulations around that. So what does this new clampdown actually mean? Well, they've actually said that they making it illegal to have any employees for crypto exchanges in China whatsoever, even if they're working remotely. They will also make it illegal for Chinese citizens to be able to buy cryptocurrency on offshore exchanges. However, it has been said that it is not illegal for them to actually hold cryptocurrencies and actually own it, but it is going to be illegal for them to be able to buy cryptocurrency on exchanges that are actually situated in another country. Though I do expect this to have some effect in the short to medium term, I don't expect it to be extremely impactful because it is just a continuation of their previous policy in regard to cryptocurrency. Obviously, it's not something that they support. They're trying to get the digital yuan to be the sole electronic currency and the national currency, and that they see Bitcoin as a threat. I don't actually consider Bitcoin as a threat to these national digital currencies, and I think things such as Tether and other stable coins are more a threat to these national digital currencies. However, China has made the policies pretty clear, and I think overall it's going to be of a disadvantage to China, and it's going to give a lot of opportunities to other countries over the world to benefit from this and to be pioneers overall in the crypto and the blockchain sector. I do not plan to sell any Bitcoin or any other of my altcoins at the moment. Bitcoin is at about 41,500 at the time of making this video, and I think there is a lot of strong support at the $40,000 mark. I don't know what's going to happen over the next couple of days, but I think it's very important that we keep some long-term perspective and make sure that we are positioned for future growth and we don't get shaken out by these news stories which are primarily put in place in order to produce fear in the markets and get speculators to sell. I expect Q4 to be an explosive quarter for crypto as a whole, and I expect our portfolio to do very well as well. So I'm going to keep those in our portfolio, and as you know, my strategy is to sell into strength. So when the crypto prices are doing really well, then I trim our positions and then I diversify into other asset classes, but I do not sell when there is fear, because I think if every time people sold their crypto when there was some rumblings from China around either banning or increased regulations, you would not have been able to benefit from the increases overall in the Bitcoin and the crypto prices. So stay calm, keep perspective, drown out the noise. However, there was a really good announcement from Twitter this week when they announced on Friday that they were going to be using the Lightning Network as a payment rail to be able to reward Twitter users and people who create good content. And this has actually been set up by Jack Mallers' company called Strike, which is exactly the same company that implemented the rollout of Bitcoin becoming legal tender in El Salvador using the Strike app. And this is actually now being able to transferred into Twitter, and people can now receive Bitcoins for creating good content. But what I think is really important is this actually sets the pathway for us to be able to send value from one potential user of Twitter in one country to another country really seamlessly. So this is going to be a really great development, and I think that this can be rolled out beyond just Twitter, and I think a lot of technology companies will be taking note, because the Lightning Network is an open network and is able to be interoperable on many different platforms throughout the world. So this is a really important development, and we have seen the Lightning Network go from strength to strength in terms of adoption, especially over the last 6 months. And I'm expecting this to grow more over time, and Bitcoin can continue with that transition from a great store of value property, which it obviously has because it's finite and a scarce resource, but also allow it to be a medium of exchange through low fees on the Lightning Network and also increased speed. Thank you very much for listening to my video today. And as usual, if you have any questions, and don't hesitate to let me know. You can also join my Discord community group, where we have a really amazing community who regularly talk about lots of different diverse subjects every day, and we have a lot of fun and interesting discussions in there, so please feel free to join. You can see in the description section below an invitation which will allow you to join that group as well. Thank you very much for listening today, and have a great week ahead.